Good evening, David. How are you?
I'm well. Welcome to Thursday evening.
Yeah, I know. Well, it looks like we've got 25 or so people. Everyone's muted. Thank you for that. And Dan Fox, somewhere down there, yes, has compiled some questions for you from the assembled masses. If other people can put questions on the chat room, we'll try and deal with them as we go. And right, David, when we first started the raise, it was an idea. It was up there in the clouds, and then it got a little bit more interesting. Stuff started to happen, and now it's a reality. And there's a reverse takeover, and after 4 rounds of raises, we're off to the races. Can you give us the menu, the deal card, or whatever you want to call it, and just give people an update and let us know where you're at?
Yeah, I mean, I'm going to just change my background just a second, if you don't mind, because then it will work. But this card and this app are really the core foundations of High. So through the app, you can see what's available to you. And in the card, you can go on ATM and it'll tell you what's available to you. And I have called this the freedom of pay. Yeah. The freedom of pay, and thanks to everyone who's supported this so far, because this has even got MasterCard himself excited. The freedom of pay is the ability for any employee and any pensioner to access either their wages or their pension in real time and for free. So we don't charge the employee and we don't charge the pensioner for what we call the freedom of pay. And they simply use the card and they go and spend in the store the way you would do, spend online. It's Apple Pay enabled, it's Google enabled, and simply you are accessing your pay in real time. And through the cost of living crisis, this is becoming quite important for folks today because a lot of people are struggling. But the real trick that High has done in the development of this card with MasterCard, and we'll talk about that relationship in a second, Richard, is that for every employee the employer gives that card to, we are also prepared to finance their payroll. And that's a significant change to the market. So for the first time ever, an employer can actually have their payroll externally financed, which has never happened before. In fact, the only time employees have ever had their wages paid by an external party was through COVID, when the government were paying them. But until then, it's never happened before. Now it's a reality. And it took us a long time to do this because we really underestimated the legal challenges of transferring wages to a party who was not the employer. That took years of legal work, and it's now signed off. And the legal agreements have been signed off. The legal agreements have also been insured by AIG, which means in the event that there is a non-payment of wages from the employer, the insurer will pay the funder and recover the money either from the administrator or from the government itself.
That's a significant advance then. So you've got there is insurance cover on this as well now, because we didn't have that before, did we?
We didn't envisage that we needed it. It's funny, right? But as we started seeing the real complications of taking one funder live, which was HPS Partners, who are the second largest credit fund in the world, we realized that everybody was worried about the insolvency. Nobody was worried about it. It was about what happens if the employer goes insolvent. So we realized that rather than having that conversation with 100 different funders, if we just had that conversation with one insurer and insured the structures that we'd created against default, then therefore the funder only needs to look at the insurance policy. They don't need to worry about what happens in administration, because that's what the insurance is there for. And you said a significant move, Richard. It's a game changer, because what it means is if you actually see how retail banking has pulled away from SME lending. They've pulled away from SME lending because Basel III has made it not efficient for capital. And for those that don't understand what that means, it means for every £100 a bank gives an SME, they need to hold back £25 of capital. But when you insure it, then suddenly the bank can see the SME as the insured application, which is AA. So suddenly for every £100 the bank gives an SME through high, they only need to keep back £1 in their balance sheet. So it really changes the dynamics of how banks look at SME and SME lending.
Tier 1 capital ratios and all that rubbish, which
is
a bit technical. But also, look, if it's the UK government paying people, or in insolvency, the UK government steps in, that's actually AAA. Which is AAA. You've got the lower rate of borrowing, if you like, because you're slicing up the highest tranche of the capital structure, because it's almost a securitization.
Yeah, and that gets interesting when we talk about funding. But I mentioned something when we talked earlier, and I'm amazed you didn't pick up on it, Rich, because you're normally all over me, is pensions. Right, because that's a new word that High's used, pensioners. And what we recognised is, while we were going through the frustrations of the funding and the legal structures and the insurance, we knew the card actually worked. So what we did is we took the card to the insurance industry and we said, wouldn't you like for pensioners also to be able to get their money anytime they want? And why that's significant is because you don't have a funder, because the pension fund have the money. So actually the pension fund become the funder of their own pensions. And it's just as exciting as finance and payroll, because High is the first company to be entering into the pension market. We're entering into that market with Mercer, who are the largest pension administrator in the world. They've got 1 million pensions. And now we've got all the other pension companies talking to us. And the reason that's also exciting is because pensions for MasterCard is a brand new market. MasterCard are not in the pension market. So they've woken up to say, hang on a minute, he's just taken us into the pension market for pension distribution. So we're seeing a lot of traction now in the pension activity. Mercer have a go live date in the UK. It's the 15th of June, which we're working really hard towards. And on the 15th of June, pensioners are going to start to get a pension from their pension fund saying, hey, Rich, you can now access your pension any day you want. Here's the card.
Yeah, that's brilliant. I mean, wow. It sort of front loads it almost, doesn't it? Or it accelerates it.
Accelerates it, but it created a new market from us, because whilst we were waiting in the legal structures to finance payroll, we kind of pivoted to the pension market because we could deliver that today, because we don't need the same complexities that you have with pay.
Yeah. Okay. Well, look, if there's anything else you want to look at on the sort of menu or the deal card, let's get going on the questions, unless there's anything else.
I mean, I think since we've last met in the last round, Rich, and just to remind people, the last round we did with Rich and in our market is there was an institutional round happening alongside the crowdfunding, and the same is happening right now, Rich. So we've got the crowdfunding right now for people who want to get involved before we go through the RTO, but we've also got institutional rounds happening in parallel. And to be clear, the last time round, as you know, Rich, the institutions stopped the crowdfunding because they took the best round. But
they shut it off.
The same is happening again there. So we're in major talks with probably 4 major institutions. 3 are really advanced. And one of them institutions is MasterCard itself, because MasterCard have got really excited about what we're doing. They're taking us through an investment committee. They've made us part of StartPath, which is one of a handful of companies that they get behind to scale. Yeah. And it's gone from strength to strength. They've had us come and speak to their banks in Singapore, in Asia, in Germany, and the UK. And they're really pushing the banks to actually start to look at what we're doing together. So there's been a lot of movement there. We've also just recently been invited and accepted to the new Ernst & Young Accelerator. That gives us access to their ecosystem, their clients, their working practices. We had 3 requests from Ernst & Young when we applied. The requests were, what did we want from the program? We said we wanted access to your working capital team because you do a lot of working capital for the global corporates, and that would be interesting to us. We want to have a relationship with your global payroll team because you run a lot of payroll around the world, and we can help finance the payroll and improve the well-being of employees. And the third one we said is, and we want you, Ernst & Young, to be a pilot client. We want you to use High. So as we go through the EY program, they're the 3 things that we've asked as part of their new fintech cohort. So a lot's been really moving in that market. So we're seeing it's building slowly but surely. And I know for some of our investors, they think it's been slowly, but it hasn't. I mean, you've really created a brand new asset for the global world of finance to actually finance here. And we've realized,
Okay. And look, there's a few members from the original investor group from, rounds 18p, 28p, 70p, etc. We've got a discount round at the moment. Julie from Aviva's on as well, which is great. But look, some of the questions Dan Fox has sort of got together. I'll just start from the top. We'll post the answers to these as well. Obviously, there'll be a recording of this webinar. So the PAF frameworks, is it sorted? Is the insurance sorted? Is there anything else that needs to be finalised before this PAF pipeline that you keep going on about? What's the deal there, David?
Yeah, I mean, so if you're not investment grade, and we'll talk about that separately, then the insurance is mandatory for the funding market. So it's actually an important milestone. The policy has been written, so the policy has been finalised. It's going to the AIG investment committee for sign off. It gives us initially 150 million of insurance to start with in the UK market. It's a global policy. It's written by it's global in nature. However, but it's local in its deployment. So what I mean by that is when we go to Germany, we just need to verify the employment law, the insolvency law, and then AIG sign off Germany as a country. Then when we go to Spain, we do the same, etc., etc. But it's following the same framework, the same principles that we've created to ensure the overall structure.
Okay. All right, and HPS partners are involved in that as well, aren't they?
Well, HPS have been predominantly the funder in this case. We've also got Citibank, but Citibank are actually more interested in investment grade, so they don't want insurance. So they want to go after Shell, Unilever, and people like that. And you would never use insurance because it wouldn't make it. They just wouldn't pay the price.
Yeah. Okay. And look, being blunt and frank, we put this deal out to our investors, gosh, over a year ago now, with the prospect of an RTO. How is that progressing? There was a delay requested from Oscillate. I think, obviously working capital, etc. Are there any going to be, the people on the call have asked, are there going to be any more delays? We want to see it go over the line. Is the intention to list back on Aquis or a more mature market? I'm going through that with a mining company I work with at the moment. We're heading off to AIM. And will there be, on listing, will there be a lock-in for management and other larger shareholders so that we're not going to see a massive dump of shares? I think that's probably a concern for someone who's holding 10, 15 grand, or 5 grand worth of shares. They want to see a liquidity event.
Yeah, I think these are really good questions. I mean, so obviously the RTO has been delayed until we can prove that we've got sufficient working capital within High to close the RTO. So we estimate that that's about £500,000. And beyond the 803,000 we've already raised with you, Rich. And we were very clear when we met with Oscillate that we would not list on Aquis. It was not something that we wanted. So we got the assurances from their broker, which is Peterhouse, that we would relist on the standard market, which is the main market, London Stock Exchange, and that was an acceptable market for us. So on that basis, we agreed the deal. We asked them where would lock-ins be applicable. Their view is only the management team would get locked in. But remember that this is a reverse takeover. So to give you some comfort, Oscillator valued at 2.4 million, 2.5 million in this deal. High's valued at 31 million. So they've only got about 8% of the stock, right? But it's really about the high shareholders you should worry about, because they can sell as well, right?
Yeah.
And I'm hoping that people stick it out, because, I think, if we do this deal, we'll come onto the market at the right time with the right story and the right solution. And we've got some really strong news coming out.
Okay. So, speaking of strong news, you spoke about MasterCard earlier. MasterCard's potentially equity investment. The investors here we need to get cracking, because if one of these boyos turns up with a big check, I think we're going to have about 24 hours to react and get involved, aren't we?
Yeah, that's probably true. So where we are with MasterCard is we were invited to StartPath in March, and StartPath is where MasterCard select about 10 companies globally that they have an interest in getting behind to scale. And Hive was one of the that was selected, and it was a 6-month program. And within the StartPath contracts, there is a contractual requirement for us to agree that MasterCard have the right to invest in the company, but not the obligation, because that depends on how you get on overall with MasterCard. And we've got the business support because of the pensions. We've got the business support because of what we've been doing with the banks. So we believe that they've already finished their due diligence, and they will go to the investment committee for approval to invest. We expect that to happen this month. But outside of MasterCard investing directly into Hive, they've also committed $1.2 million worth of engineering and development resources from MasterCard itself for free.
Okay. And so one of the questions we've had on the chat room from G is, how fast does this go mainstream, i.e., and it just becomes standard? I'd like to do that with the platform. Who needs a broker when you can just do sophisticated crowdfunding and get everyone together? So it's almost the same question to you, David.
I think we've learned some lessons there as Hive, Rich, because we kind of got ahead of ourselves and we scaled too quickly. We had to scale back. So we were scaling up because we thought we're coming to the market, realized that actually the legals were taking longer than what we thought. So I actually had to do the opposite. We had to scale back in order to ensure that we had sufficient runway to deliver what we had to. So, but the good news is, the people who StartPath, MasterCard themselves, they're talking about white labeling Hive. Now, if that happens, the scale can happen rapidly because they have the capital to make it happen. Otherwise, Hive will need to be reasonably well capitalized to take advantage of that market. But at the moment, our focus is get the UK right, get it going quickly, and then start to look outside the UK from that point forward. So conversations have happened with MasterCard in Greece, Germany, Asia, Middle East, and there's real desire from MasterCard for this solution to go beyond the UK.
Okay. Well, look, on that point, jumping around questions slightly, the company's current burn rate, when we first met, David, it was Putney Pies, almost under the road near Putney Bridge, which was fantastic. You did scale up. You had a lot of employees. I guess the burn rate got pretty high pretty quickly, which is scary for a startup, or even something with a great idea that you had. How are you controlling that at the moment?
Well, so let's go back to that period as well. So at that period, Rich, we also were working with some of the best lawyers in the world to create this asset that the banks would finance. And if you didn't use a reputable law firm to do this, you would never have got HPS partners and you'd never get Citibank. So you had to use the brains So our burn rate was high because we were creating a legal foundation that had never been created before. But the good news is we've done that now. So that burn rate's gone because we've now got the legal framework, and we've got the banks and the insurers accepting it. So to give you an idea, back in the heyday of High, I think our burn rate was somewhere between 450,000 to 550,000 pounds a month. Exactly. And today it's 130.
Okay. Yeah, I mean, you know, these aren't easy. It takes a lot of intelligent people to build these things, but unfortunately, we've got to pay them.
Well, exactly. You know, like
same problem. I just don't pay through.
When you think about it, when you build the first car, it costs you a fortune for the first car. Probably the first cars cost £1 million, right? But then you get to go and buy it for £25,000. So the expenses in building it, it's actually not in producing it.
Yeah. And look, in this round, can the investors that are on the call, can they assume that the management and you guys, Glenn, yourself, are taking part in the next round as well?
Yeah, I mean, so most of the management team, to give an idea of the commitment of the people to improve and make sure that the company has sufficient runway. I mean, a lot of people took a 70% discount on their salary, right? Which I think is a significant contribution. You know, some may not, but like, at the end of the day, people they could be earning £100,000 or earning 30 right now.
Yeah.
And remember, these are employees. These are not equity holders, right? They're just employees. Okay, they've got some equity, but they're not a major equity holder like me.
Yeah. Sorry, my video seems to be bouncing around a bit, so I keep switching on and off. Apologies for that. But a lot of the questions, everyone's quite excited about the MasterCard side of things, David. You know, their due diligence process.
Yeah.
And the white label, what's the scalability of this white labeling with MasterCard? That seems to be a keen sort of avenue of question from the guys who are on the call at the moment.
Well, I think what MasterCard recognised with High is they've got a market advantage over Visa, right? Because they have a market advantage, but they also recognise they'll lose that market advantage if High can't scale quick enough. So therefore, they're saying, well, actually, if we white label High, we can scale it. So that's part of the discussions with the High Ventures, the MasterCard Ventures team, the MasterCard Labs team, and the StartPath team. It's about, you know, like, how do you do the white label? When do you do it? You know, and how do you scale it? And these are conversations that are just ongoing. Yeah.
Okay, and then on the EY Ernst & Young FinTech program, how's that progressing? I think when we last chatted, it completes in mid-March, which isn't far away.
No, exactly. But
what are you going to achieve from that program?
Exactly. So let me explain what that program is first, so that everybody gets a bit comfortable. So it's a 6-week program, but then it's a lifetime program. So the 6 weeks is just the accelerator weeks, yeah. And then you move into, similar like MasterCard, you move into the enable program, because once you've passed the 6 weeks, you move into the business side of Ernst & Young, where they start to then engage with you and look at how they can scale you. So this 6 weeks is just, think about it as an induction course. Does that make sense, Rich?
Yeah, it does. Does that prohibit you working with others, or do they some exclusivity, or?
No, they've not.
Just first off the rank.
Yeah, we were the first. So this is the first time they've launched the fintech venture. We're one of 6 companies, I think, that were selected, again, out of thousands. So it gives you an idea of how people view the IP of High. And we're simply working our way through each of the tracks, but at the same point, we're reminding them that we came to this program with the 3 asks. And the 3 asks we had was, we want to be introduced and partner with your working capital team. We want to be introduced and work with your global payroll team. And we want you to be a client.
Okay. All right. Change of tack. A lot of people are interested on this 3 billion pipeline. How much of that is actually committed? I mean, it's all very well. I mean, I can when you speak to PR companies, say, oh, we've got so many impressions. Well, 300,000 impressions, 1 million impressions is one thing. It's how many actually read the email, click, and then convert. So a 3 billion pipeline, how much is that committed, or is it early stage? When will they come on board? And what sort of companies and employees are covered with that?
So I think it's important to understand what makes up the 3 billion first off. So these are existing clients of HPS Partners who they currently lend money to. They are existing portfolio companies of TDR Capital, or they're direct employers that have been engaged with High. I would say out of that, I'd say I'm fairly comfortable that High should be able to close 750 million of that because of the closeness of the relationship between the asset and who's dealing with it. Yeah. And to give you an idea, that consists of 3,476 companies, 1.8 million employees. And to put that into perspective, HPS and Peak, which is fully owned by HPS, they lend to 100,000 companies. This is us simply saying these are the 3,476 companies that are more likely to convert and more likely to be accepted for finance.
Okay, so it isn't it's not a necessity for the deals or the business to go balloon. You probably only need to convert 60% of that, but at a guess.
Yeah, I mean, you're right. If we convert 2/3 of that, we actually hit our target for 3 years. I mean, so there's, if you think about it, we've got a 3-year target already engaged in some form of relationship or active dialogue with High. And if we close 2/3 of it, then we're 3 years. That's the 3-year plan.
Right.
And the 3-year, and that does not include the pensions.
Okay, interesting. Okay, that does not include the pensions.
Does not include the pensions.
Right.
So the pensions alone could hit our 3-year plan just in pensioners. I think I've seen someone saying, how many pensioners are there in the UK? And to give you an idea, there's 28 million employees in the UK. There's 18 million pensioners. Okay.
Well, something's just popped up on the chat. If you convert the 750 million, hang on a minute, let me read it properly. If High convert the 750 million pounds, what does High earn off that? I guess that's a margin question.
It's a great question, isn't it? So 750.
That's a bit pointed.
Yeah, 750 million pounds would really, the best way to think of this is number of employees, right? So 750 million pounds would roughly be about 500,000 employees, yeah? And we would make roughly about 8 million in employee membership fees per month. And we would make 5 million in financing fees per annum. So that would be worth about 100 million quid.
Okay.
No, it could be 750 million pounds. Sorry, guys, you've got me doing my maths right, but because I'm thinking about one client, he's got 10,000 employees, and that's 15 million a month, right? So you've got 50 times that. I know I was right, 500,000 employees, right? So 500,000 employees would generate 750,000 pounds a month of revenue in 500,000 employees. And 750 million of revolving credit would generate as another 3 million a year in fees. So yeah, so you're talking about 10 million, just about 10 million.
Right. I mean, it's 8 o'clock on a Thursday evening. I think the maths is working.
Yeah, I just had to do it back. Sorry, I don't know we're live. So that 750 million would represent about 10 million of income.
Yeah. All right. One more technical question, then I want to get onto the process because obviously it's been drifting a while. So one question we had earlier, which Dan Fox, thankfully, he sort of fielded a bunch of questions from people.
Dan's been a star, hasn't he? He's been really good.
He has.
He's been very helpful.
He has indeed. step change. Still collaborating with them. What's going on there?
Yeah, we're still collaborating with them. Obviously, we've slowed that down a little bit because we want to focus on the core product. But what we've agreed with Step Change is more a proactive approach to debt, which is, debt advice, debt management, and debt guidance. So that someone can actually get help before they actually get into debt. Because what Step Change have recognised is almost all of the time when someone gets to them, it's almost too late. Yeah. Whereas if they can come further up the food chain and start to flag them earlier, then they're more likely to help them. So we know what we're going to do together. We've just slowed it down right now because we need to go on with our core business at the moment, Rich.
Yeah. No, understood. Okay. Now the crunch question. We've done a few rounds of raises. We certainly on the platform, and obviously, and Julie, who we're collaborating with now, they're investors, and you have got shareholders on the call that have been on this journey for 2 or 3 years now. Delays to the IPO. We hand on heart tell people, yes, we do private deals on the platform, but they're going to IPO. There will be a liquidity event. Having a whole bunch of private shares in your back pocket ain't a great idea. Why the delays? Please tell us. I'm a shareholder. I invested as well. We're all interested. What happens next? Who's coming in? If we don't get involved in the next few weeks, is there a big investor coming around the track? And what's the deal with the RTO, and how soon is it going to happen?
Again, great questions. I mean, I'll do my best to answer them, but we have to realise that, like, even with the crowdfunding investors, it's not in my control, right? So, but I can give you a good idea. I mean, so with the RTO, if we can demonstrate to Oscillate that we have raised an extra 500,000, then the RTO will proceed, and it's got a 3-month time frame. So let's just say we say to them at the end of April, we're good to the end of March. We're good to go. Then April, May, June, you'll be on the market in July. Yeah. So that's the time frame. So it's dependent on this round. But you're looking at a 3-month time frame to complete the acquisition and to list. Yeah. Mm-hmm. With institutional investors, we're at advanced stage with 3. One's a private equity company, one's MasterCard, one's a portfolio of companies that are big telecoms and media player. And then we're having discussions actually now with some people that are in the pensions market.
Okay. Well, look, I don't have any more questions. Dan, if you've got any more that have popped through from the group, everyone's keen to. A lot of people have been very patient. It's a great idea. It's gone from a great idea to, incubacy or whatever you want to call it, and now it's real. I think the main concerns have been the insurance side, MasterCard. How real is that? How real is the RTO with Oscillate? I'm certainly a lot happier with that. If anyone has any further questions, please put your hand up. We've got a few more minutes where we can deal with those, or just stick them on the chat room real quick, and we'll deal with them immediately. If nobody has any other questions, we can close this off. Unless, David, do you want to close things off with a final comment?
Yeah, I mean, like, it's amazing that we're doing this again, isn't it? And I'm grateful, Rich, to be working with you. I mean, let's hope we can repeat history twice, right? Which is we have a decent crowdfunding and we have the institutions, because it actually worked quite well the last time. But as you know, the crowdfunding just shut virtually within 7 days because Ventura took everything off the table. I'm expecting us to repeat it, but I'm quietly confident. I think you know me well enough to know that I'm just quietly confident, because that normally means I think it's going to happen.
Alrighty. Well, look, we got one. I think David and Rich have done a good job answering all the questions. Oh, well, thank you, Dan. Blow smoke up my bum. I do not understand why raising 500k is such an issue for a supposed multi-million pound industry. From Steve. Fair point.
Yeah, and I think it's a great point. I mean, look, the 500,000 ideally should come from the crowdfunding, right? I mean, the institutions are going to put 5 million in, 3 million in, 2 million in, right? They're not going to put 500,000 in. So really, this is a way of giving our investors the opportunity to help fund us to make sure the RTO happens and make us independent of the institution decisions, or we can sit back and just wait for the institution decisions.
Yeah. Okay. There was one I missed from Mike. Actually, it was saying, how confident are we that you can regularly secure the target margins for successive deals? I mean, maybe. I mean, I put my commission levels up because we're getting bigger and uglier. Personally, I'm not. I'm obviously very beautiful, but you know, is there a negotiable element to that, or is it set in stone from day one?
I think Mike raises a good point, and it takes you back to the foundations of why I made a MasterCard. Why did I use a card? Right? Why did I use a card as a delivery of this? And the reason I used a card is because then you can get involved in loyalty, rewards, and a whole bunch of other stuff. So there's a whole you can get involved in, but it has to be card-based because that way you can track the spend. And we've been testing the market, and we've had the card in the market entities. Employees have been using it, care home employees are using it, our own employees are using it. And what we've started to see is it's a fallacy that this is a low-paid worker solution. Entities, employees who earn 100,000 were using this card. The difference was the transactional value. The entity employee, when they used the card, was £500. The care home operator was using the card at £15. So actually, it's a myth that it's only low-paid people that need access to their salary. Yeah, back to what Mike asked. So we actually see huge revenue upside in looking at where this card is used. If you go to Asda, there'll be a 5% cashback. We'll get 1% if that happens. Yeah. If you use this in Virgin Airlines, you get a 2% cashback. We'll get 20 basis points of that. So there's a whole array of thoughts for you to think about, because if you own the card, you own the cashback.
Yeah. No, understood. Quite securitization of wages, basically.
Yeah.
In a nutshell. Mike's just followed up. Have AI? Oh, bugger, it just disappeared. Hang on a minute. Mike said, have AIG settled on sensible and economically affordable premium levels that meets business plan and forecasts?
So the price of the policy is 70 basis points, and it gives the funder 90%. It'll give the funder a 90% cover. Wow.
Really?
Yeah.
Oh, that's true, because you're kind of doing AAA lending, aren't you? Yeah, okay, I get it. Sorry.
No, it's like, honestly, it's a game changer.
Yeah, I thought that was damn cheap, but obviously it's you're basically carving out the AAA level of the capital structure, because the wages are insured by the government if it all goes tits up, right? Sorry, excuse my friend.
And again, you talked about part of our journey. So part of our journey in the last 2 years was actually really to understand what you just said there, which is wages are senior preferred creditors. So they very seldom default. And even when they default, they normally get paid by the administrator. And this is the work we've been doing with Deloitte and the UK government. And what AIG fell in love with is we took to them the data for the default of wages in the UK economy. And to give you an idea of what the data the UK shared with us is, the UK government is exposed to £130 billion of payroll because that's the guarantee, yeah? But they only ever paid out 30 million, which meant the default in wages was 2.5 basis points.
Yeah.
And the reason it's 2.5 basis points, confirmed by Deloitte's restructuring people, is because wages are so senior that if there's any money in the state, it has to go to wages.
Yeah, no, understood. And I'm going to ask the very last question. I'm going to answer it before we sign off. Joanna, Everything sounds so amazing. So why is 500,000 so hard to secure? Well, it's not. We did. What did we do? The last round was 906. We didn't quite get to the million, but I always say we did 1 million. And then it got shut off by Ventura. It's not.
Ventura stepped in and did 2.5 million, right?
Yeah. So it isn't going to be hard. What we want to invite everybody is the ability to get involved. It's your own decision. You take your own analysis. I hope the webinars help people. David has done a bunch of interviews with Zach Meir and others. We'll continue to support him. Julie Mayer with her cohort are going to help support from that side of things as well. So on that note, I think, David, thank you so much. Good to see you again.
You're a star.
Drew, thank you for doing the puppeteering behind the scenes. And Dan Fox, wherever you are, thanks for your efforts, and everyone else on the Telegram group, current shareholders, new shareholders, and interested parties. Let's see where we go. This should go to the moon.
Thanks.
High five.
High five. I like it. Thank you.